So friends, welcome to now world of income tax. From past so many days, we have been checking GST, indirect tax. Now it is all about direct tax, income tax, tax on your income. One of the vast tax law in the world, I can say, is Indian income tax law. Okay, when they counted, it was 800 plus sections. Why I'm saying counting was required because there are many sections like which are inserted with some alphabets like 206 AA, okay, 194 A, 194 B, 194 C, 194 D, DA. That way, if you count, it goes to 800 plus section count. Getting it? That is how this income tax law is. So, slowly, steadily, today's whole agenda will be only discussing basics. Only discussing basics of income tax law, how we have to go ahead with it. Okay. Your weightage is 50 marks, as you all know. It is part A in your syllabus. In your paper, it is part A. So, when I talk about income tax law, see, GST was on each transaction. GST was and is destination based, consumption based indirect tax following dual model. Means central government as well as state government is getting tax out of your GST. Further, transaction is over, that particular tax issue gets over. Means, for example, I sold you this stylus, transaction is over, tax is over, time of supply you have identified, you have made the invoice. So it is at the particular point of supply that GST applies. But income tax is not like that. Income tax is for particular time span. It is for particular time span. You can't find income from a transaction because income is exposed to some periodic costs. Meaning to say, we can't say that, I have sold 1 unit of mineral water, 1 liter for 20 rupees. What exact income my company earned is difficult to find. Why? Because there would be factory rent. Factory rent would be per month. There would be depreciation for my machine. So in short, in GST it was simple. On the sale value, on the supply value, on the transaction value, you charge the tax and you got away with that. Getting it? But here it is a concept of particular period because there are some costs which are period cost. For example, rent per month, depreciation per annum. So these costs also have to be accounted to find out income. So GST was on the sale value and its burden was passed on to end consumer. So indirect tax. The person who was having the burden and person who was paying to government were two different persons. But in income tax, it is charged on your income. Directly it is charged on your income. Okay. And so much discussion on budget day happens only about income tax. Talking about Aam Admi, right? So it directly affects your pocket. How much chunk you are earning, out of that how much you are paying to government, what remains is what you can enjoy. So that part which is taken by government is income tax, compulsory contribution. Okay. So in income tax, what terms we have to use often? I will discuss about those terms also. So income tax weightage 50 marks in your exam. Talking about what is the source of income tax law? Source of income tax law. Okay. Like there was body of GST law that we learned. 5 acts, circulars, notifications, rules. There will be source of IT law also. Income tax law, if I have to study, then what is the body of this income tax law? Body of income tax law. So friends, a big change is going to happen, but not for your exam. You know, recently new income tax bill is presented in the parliament. That is called as income tax bill of 2025. So yes, soon it will become act. Soon it will become act, but not for your exam. Even if it becomes act, even if it is passed by both the houses of parliament, given assent by honorable president, it will become applicable from next year. So to be from exam perspective, if I want to talk, it will become applicable from May 26 exam. From May 26, September 26, Jan 27 exams. As far as we are concerned, September students, September 25 and Jan 26 applicable will be earlier act only. So then we are so demotivated to study because anyways there is new act. Then why are we studying old? This question will come to your mind. Let me tell you, 96% of the things are same. 96% of the things are absolutely same. Nothing has changed except section numbers. So you know, big problem is for me, not for you. Because anyways, you don't know any section numbers right now. And anyways, as a student, you ask questions. Should we remember section numbers? So yes, you should remember. But again, after 1 year now, you'll have to forget them when new act is introduced. See, but I'm telling you, it's bigger challenge for me now. I have invested 15, 16 years in that. And now I have to forget all those old sections and go to new. So I think it's not such a big problem for you. You should learn them. Crux and provisions are going to remain same. Calculation is going to remain same. Section numbers will of course change in the new income tax act. Okay. So see, source is first. So as of now, I'm saying what? Income Tax Act 1962. 1961. 1961. 1962 is income tax rules. So Income Tax Act 1961. From 1961, we are using same Income Tax Act. So of course it needed a revamp. It needed a big change. That's why there is bill of 2025. Second, income tax what? Rules 1962. Income Tax Act, income tax rules. Third, notifications. Notifications issued by central government. Fourth, circulars. Who issues circulars? In GST, who issued circulars? CBIC, Central Board of Indirect Taxes and Customs. Here, there are circulars issued by CBDT. CBDT stands for Central Board of Direct Taxes. CBDT. Fifth, now understand. We are carrying Income Tax Act 1961. From 61 till 2024, do you think law has remained same? Obviously not. Law has literally changed. But how did we change that? How did we effect that change? So every year there is a budget. Budget. In budget, one of the main discussion. What is budget? The projection about inflows and outflows in the economy. I am talking about annual union budget. It is projection about inflows and outflows. One of the major inflow for government is income tax. 19-20% of revenue of government comes from income tax. About another 19-20% comes from GST overall on an average. So in budget, one of the discussion is on income tax. So in budget, they will give you finance bill that becomes finance act, and that finance bill proposes changes to income tax act 1961. That is how income tax act 1961 is still kept alive, by proposing changes every year, some changes every year, some changes. That's why most dynamic subject. Why do we need changes, you will say? See, way of doing business in 1961 and way of doing business in 2024 is dynamically changed. So you will need to keep on changing. Further, wherever reference to any figures is given, then figures have to be changed. Inflation. So, what point we are saying? Amendments. What is body of income tax law? Amendments made by whom? Relevant finance acts. Amendments made by relevant finance acts to what? To whatever amendments have been made by finance act to what? To income tax act. Those amendments also become body of law. Sixth, you have to read relevant. You have to read relevant finance act for what? For rates of income tax. Friends, the income tax rate, they come not from income tax act, they come from finance act. Just to give you context of this, probably most important discussion in basics of income tax that we are doing right now. Example, for FY 24-25, for FY 24-25, let me tell you, income tax is calculated financial year wise. Getting it? Income tax cannot be calculated transaction wise. So income tax is calculated for span of financial year. Financial year is how many months? 12 months. Starts on 1st April, ends on 31st March. So if I talk about rates of income tax for financial year 24-25, understand clearly. First of all, in income tax, financial year is not called as financial year. In income tax, financial year is called as previous year. That's why in GST, while doing composition scheme, I told you don't use the word previous year, use the word preceding year, because in income tax you will have the word previous year, very much specific meaning. So basically, if I am earning income for FY 24-25, see today's date 31st March 25. last day of this financial year. Thank you. Last day of this financial year. This financial year 24-25 is called as, first of all, it is called as previous year 24-25. What it is called as? Any doubt in this? So, what is previous year? Previous year is year, previous year means financial year in which income is, hmm, in which income is earned. Can you guarantee, friends, how much will I earn by today evening? I have opportunity of earning till today midnight 12. You will say, sir, what will you do in one day? If I have participated in Dream 11 and my team does well in today's IPL match gets over at 11 o'clock, then I understand I have been 1 crore rupees. Can happen, na? You can't underestimate how much you can earn till 31st March 12 midnight. In short, I will not be able to calculate my income for the PY in the PY. Again, assessing, okay. I will not be able to calculate my income for the PY in the PY. In short, I will have to do post-mortem. When the year is going on, I can at the most estimate, but things can go above my estimates or below my estimates. So, income for the PY is calculated actually in the next year. Income for PY is calculated in next year. So, the year in which calculation takes place is called as AY, assessment year. So, what is assessment year? So, what is assessment year? And sir, why you have changed the topic, that relevant finance act, and now what you are doing? To explain you that only we are doing these things. Understand? So, PY and this is AY. So, friends, for PY 24-25, AY will be 25-26. So, what is AY? AY is AY is that AY is nothing but financial year immediately succeeding the previous year. Assessment year is financial year immediately succeeding the previous year. Okay, it is that year, it is the year, it is the year in which what? Yes, total income. I will tell you what is total income. It is the year in which total income and tax, what? Liability shall be. So normal student thinks paid, not paid. Shall be computed, not paid, computed. You will say, sir, of course, when we are compute, after that only we'll pay. What fool you are making us? No, no. It's not like that. Payment starts in the PY itself, in the form of advance tax, and in the form of TDS, and in the form of TCS. Payment happens in the payment starts in the PY itself for the AY. So I cannot say directly that AY is the year in which tax is paid. At the most, what I'm saying, in which exact tax is computed. Are you getting difference between PY, AY? because that's the most confusing term as far as layman is concerned to quickly understand PYAY. So in fact, in the a new bill, they are changing it. In the new act, they are changing it. Anyways, let's not go into that changes. But understand, have you from tomorrow, friends, from tomorrow, 1st April 2025, which PY will start? 25, 26. You will immediately understand what is PY if you replace that with FY. If you get stuck in the English, then you will give some funny answers. So from tomorrow, which financial year starts? 25, 26. So from tomorrow, fresh PY 25, 26. Today, which PY ends? 24, 25. Income of 24, 25 will be assessed in AY 25, 26. Clear? Income of PY 25, 26 will be assessed in 26, 27. Clear? All of you understood? Now. So, sir, our main discussion was what? Main discussion was body of income tax law, in which one thing is Finance Act. And I'm saying, pay attention, pay attention. So, if you want to know, pay attention afterwards. First of all, you should sit like this in class. Okay, understand. So, my question is, my point is, tax rate changes. Tax rates what? May, actually not changes, may change from AY to AY. Tax rates may change from AY to AY. Means each AY friends, tax rate may change. Tax rate may change. Each AY. Any doubt? So if let's understand 2 to 3 things. When are you giving exam? So our CA exam date is what? CA exam, chalo, tell me at least month. What is your CA exam month? September. September what? 2025. A student may be giving May 2025, or he may be giving Jan 2026. Understand? There is something common in these 3 exams. What is common? Don't say there are CA exams. Common in this 3 months of the exam. What is common? Understand? Which PY has come to end before these months, before these above dates? Can you answer this question? Which PY has come to end before these above dates? PY 24 dash, agreed now? Very deep concept I'm telling you, because lifelong this concept will be helpful for you. PY 24, 25 has come to an end. PY 24, 25. Why did I check this? If you are sitting in Jan 26 in your office and a client walks in for the recently concluded PY's calculation, then it is going to be of which PY? 24, 25. Corresponding to 24, 25, which is the AY? 25, 26. Now friends, this exactly is applicable for your exam. This is applicable for your exam. This is applicable. This is main thing. Which AY is applicable for my income tax exam? So as of now, what batch we are doing? In that batch, which AY we are doing? 25, 26. Means which PY? 24, 25. Understand this. Because PY wise calculations will change. May change. Where are the tax calculations given? Tax calculation, tax rates are given in Finance Act. So which Finance Act will be relevant for this? That is my main question. Yes, class monitor, photographer. Which Finance Act? Which Finance Act is applicable? Listen, listen. That is what we are learning now. When did budget happen? When did recent budget happen? Feb 2025. Agreed? Friends, Feb 25 made changes or proposed changes for the upcoming financial year. So in Feb 25, which is upcoming financial year, 25, 26. That is AY 26, 27. So that is not applicable. This is main thing. Budget of 2025 means finance bill or finance act 25 is not applicable. Which is applicable? 24. This is where students, even of final, make mistake. As soon as budget is there, Feb, and you are giving exam till whatever Jan 26, you should not worry about this budget. These budget changes will not applicable be to you. You don't have to study them. What happened in this budget is useless for your exam. They cannot ask you question on that. They are not allowed to. This is the cycle. So which budget is applicable for you? Which finance act is applicable for you? Finance Act 2024. What is the logic? Budget in Feb 2024. Budget in Feb 2024. Proposing proposing changes for upcoming FY, that is FY slash, can I say PY 24 dash 25, that is AY 25 dash 26. Hence applicability, hence applicable for said AY. Did you understand? Tell me honestly. So now tell me accordingly, Finance Act 23 would be applicable for which AY? Finance Act 23 would have been applicable for which AY? 24, 25. Understood, na? How to go ahead? Mind you, this year was unique. This year was unique. What I told you is half knowledge for this year, especially. Because budget took place in Feb 24, understood. But in Feb 24, it was a budget called as interim budget because it was an election year. So what happened, in Feb 24, some, what you can say, some nominal changes they did, which wouldn't affect anything, which would not change anything. Nominal changes. When? In Feb 24. But main budget happened in July after election. So this is a unique year. All election years will be like this only. After 5 years, it will be like this. Election year, no? So after election year, what happened? Means after elections, what happened? One more budget, annual budget. It was presented in July. When was it presented? July. So friends, and July 2024 budget shall also be considered. Shall also be what? Considered as Feb 2024 budget was dash. Budget was interim. What is interim? Not final. You know the interim dividend. Dividend declared before final dividend. Understood till this? So very unique here. You will see unique changes. Unique dates from which these changes became applicable. So as and when we go ahead, I'll tell you. Now what is main point? I was telling you that what is applicable? Two things I told you. Relevant Finance Act is applicable. Now did you understand which is Relevant Finance Act for you? Relevant Finance Act for you is Finance Act 24 is the Relevant Finance Act for you. So for telling you Relevant Finance Act, I told you all these things. Okay, and amendment made by Relevant Finance Act. So for you, amendments made till which Finance Act? 2024. So see, two times I have written this. Fifth point, what I have written? Amendment made to what? Income Tax Act. By which act? By Relevant Finance Act. So in Income Tax Act, whatever provisions are there, they may be changed. By what? Finance Acts. So from 1961 till now, whatever changes have happened by Finance Act to Income Tax Act, they are applicable for you. So already we have incorporated them in our syllabus. Secondly, rates of income tax may change every year. In short, what will be the source of rate of income tax? Source of rate of income tax won't be income tax. Source of rate of income tax will be Finance Act. Understand, friend? It's not so straightforward. Source of rate of income tax is Finance Act. So if you are studying for AY 25-26, which Finance Act is the source of rate of income tax? Finance Act 2024. You will be very tempted after learning this whole slabs and everything. You will be very tempted to, Amirji, you will be very tempted to know what has happened in current budget. But that is only for general knowledge. Because current budget is of 2025, which will be applicable for PY 25-26, AY 26-27. Understand? So this is what I want to tell you. This discussion will to continue only as we go ahead. And then seventh point is your, what is seventh point? Do you want to know? Seventh point is your decided cases. Decided cases, or you can say judgments. Judgments given by whom? By Honorable Supreme Court. This also will become body of income tax law. Fine. Shall we go ahead? Now, understand. After doing this, some basics that you should understand. Some basics that you should understand. Okay. So it is which tax? It is direct tax. Why it is direct tax? It is direct tax as burden of income tax cannot be shifted. All of you, burden of income tax cannot be shifted. It is taxed on. It is taxed on what? It is taxed on income. Whose income? Income of assessee. So we are now going to understand who is assessee. It is taxed on income of assessee earned in the PY. Earned in the PY and computed in AY. Who is assessee? Very good. So assessee is any person. Assessee is any person. All of you sitting here are person. Yes. Assessee is any person who is liable to pay tax. Who is liable to pay tax? Tax, income tax. Person means what? Person will include artificial also entities. Okay. So person will include individuals. Hindu undivided family. Company. Firm. Firm means what? Firm will include LLP also. Partnership firm also. Association of persons. Body of individuals. Association of persons, body of individual, any artificial juridical person. Okay. Even trust, society, everyone will be person. So no one is left from person. And any person who is liable to pay taxes, assessee. AJP is artificial juridical person. AJP stands for, okay, HUF stands for AOP stands for Association of Persons. BOI stands for Body of Individuals. AJP stands for Artificial juridical person. Income. Income can be earned in 5 ways. These are called as heads of income. So income heads, the heads, all of you heads, there are heads of income. Government says we will tell you how to calculate your income. Tax, so we will only tell you, not tax. What I'm saying, how to calculate income, we will tell you via this act. So for calculating that income, please divide income in 5 heads, because each head will have unique way of calculation. If you misclassify, if you don't classify correctly, you will end up doing incorrect calculation. You might end up doing incorrect calculation. Okay, so it is income from salaries, house property, salary. This house property will call as HP. Profits and gains from business or profession. I'll write the full form. Capital gain. I'll write the full form. And IFOS. Income from other sources. So salary, HP, PGBP, capital gain, other sources. These are 5 heads of income. Heads categories. So what is the full form of PGBP? PGBP stands for profits and gains from business or profession. Then CG is equal to capital gains. Then IFOS is income from other sources. 5 heads. Got 5 heads. Now see, salaries is there, na salaries. That is between section 15 to 17 of Income Tax Act. HP is between 22 to 27. PGBP is 28 to 44. Capital gain is 45 to 55. And IFOS is 56 to 59. Section numbers of which act? Income Tax Act. So why are you telling section numbers? Point is whether income will fall in IFOS or income will fall in salary or it will fall in PGBP or capital gain or house property will be decided by the first of the sections which you have written in the series. That is called as charging section. Means HP. In HP, what will be taxed? It is discussed in section 22. In PGBP, what will be taxed? 28. Capital gain, what will be taxed? 45. Salary, what will be taxed? 15. IFOS, what will be taxed? 56. These are called as charging section. If that section doesn't create a charge, it cannot be taxed in that particular head. In short, to tax in that particular head, that income should be charged in that head. Then calculation will take place as per norms of those head. I'll tell you one simple example. It will make you understand what I'm saying. Hmm. Heads of income. See, I'll tell you example. Then you will easily understand. This is example for why classification of incomes in correct head is necessary. In correct head is what? Necessary. Why classification of incomes in correct head is necessary? Telling you one example for that. Pay attention. There is Mr. X and there is Mr. Y. Both are equally talented. Both did education from same college. Same level of experience, same level of knowledge, same level of intellect, same level of upbringing. What happened? Mr. X was called by LMN Private Limited and they started giving him 40 lakhs of package. 40 lakhs of package, annual package. They started giving him annual package of 40 lakhs. Understood now? So this is, friends, his salaries because between LMN and X. Why it is salary? Because between LMN and X, LMN is employer, X is employee. So what relation they have got? Employer, employee. Whenever there is employer-employee relationship, that amount gets taxed under the head salary. So this Mr. X, his income of 40 lakhs attracted which section? 15. So I am going to speak in this sense with you. 15. He attracted 15. Same day, his friend also got offer from PQR Private Limited. Similar job profile. This PQR contacted me what to do. I tell him don't accept job. You negotiate. You negotiate and tell them that you want consultancy fees. What you want? Consultant, same 40 lakhs. Same 40 lakhs. But take this 40 lakhs as what? Fees and not salary. And company also accepted happily. And he also decided to call me and I gave him that suggestion. Now, for this fees, what attracts PGBP. It falls in section 28. No employer-employee relation. Like I am giving services to VTechno. No employer-employee relation. Whenever batch is there, I'll take the batch. That's it. So what I am getting? Salary or professional fees? Professional fees. Because accordingly I will take batch with Christ University also, with MEPL also. So no one knows how many clients are there with me. About 6 clients. If I consider them as clients, then I have got such 6, 7 clients. Getting the point? So none of them is binding me. I'm none of their employee. Everyone, to everyone I'm giving professional services and getting professional fees. Understood? So friends, this attracts section 28, and that makes me happy as compared to 15. Why sir? Why? Both these people. Now see huh, what happened. Both started job on same day, both started saving same thing. He decided to take a car. He decided to take a car of 10 lakh rupees. He also took car of similar car, same car, 10 lakh rupees. Understood? Friends, for this car, both did some common similar expenses, both did. What expenses? They had taken this car on loan. So they paid interest on loan. They paid interest on loan. Both paid interest on loan, say 75,000. Both paid expenses for petrol in the year 60,000. Both spent for servicing, repairs, say 40,000. Both paid for insurance 20,000. Both. Friends, how much spending they have done? 75, 60, 40, 20. How much? Let's change with your permission insurance figure. Let's make it 25,000. So round off you will get some figure. 2 lakhs. Both spent 2 lakhs. Friends, he also spent 2 lakhs. He also spent 2 lakh. On what? On that car. Friends, please understand. His 2 lakhs. Whose 2 lakhs? Salaried person's 2 lakhs is a waste. It is an expense. So of course, for this Y also, it is an expense only. But this 2 lakh is very valuable for him. This 2 lakh is his deductible expense. Deductible expense means what? Congratulations, 40 lakh now has come down by 2 lakh. 40 lakhs has come down by 2 lakhs. It is allowed as, this 2 lakh is allowed as deduction. Any expense that is done by businessman for his business is allowed as deduction. So his taxable profit is no longer 40 lakh. His taxable profit is 38 lakhs. Deductible expense means while computing taxable profit. Friends, not only that. So actually this X also spent 2 lakh, but nothing. Nirmala madam will just look at him. You spent? Good. But for whom it is beneficial? For businessman it is beneficial. Because businessman has shown this car as his business. And which is not false also. One more thing. One more thing. There is a depreciation on this car, which is to be taken at 15%. So what is the car's value? Car's value was 10 lakh. So 1.5 lakh will be depreciation. So friends, because of this car, his taxable income has gone down. To what extent? 40 minus 3.5. His 36.5 lakhs is his PGBP. It is his PGBP. But of course, I have not considered other expense. If he wants, he can take other expenses also as deduction. like the rent he's paying for his office, whatever expense he does, hotel expense. If he proves that that hotel expense were incurred for his clients or employees, everything. But because of this car, what is the impact? His taxable profits go down by 3.5 lakhs. But continues at this person continues at gross taxable salary of 40 lakhs. He is given only one deduction, that is called as standard deduction. Which deduction? Standard deduction, which is 75,000. This is irrespective of the fact he purchases anything, does not purchase, what expense he does. Standard means what? Standard means uniform. Let salary be 50 lakhs, let salary be 1 lakh, let salary be 10 lakh. Always there will be deduction of 75,000 per annum. So how much is that? So 39.25 lakhs is what? His taxable salary. Don't you think both did same expense? But who will end up paying less tax? The one who is having PGBP. So in India, pay attention. In India, the businessmen are happiest class of people, and salaried are most worried class of people, because both maybe work equally, but salaried person pays maximum tax, unfortunately, because they can't claim any fancy deductions like this businessman, even though both are doing same expense and same earnings. Because car is not required. Government says car is not required to earn salary, but car is required to earn business income. That logic. Why I'm telling you this? Not for you to, not to motivate you to do business, but I'm just trying to tell you how each head of income has its own way of calculating income. So even though set of income and set of expense remain same, the way of calculating taxable income changes. Because I want to drive that point home. I'm not here to tell you, don't do job, do business only. I'm not here to tell you that. That is your personal decision. I'm just telling you how classification of income in correct head matters, and how charging section matters. I just want to drive that point home. Understood? Now, please understand one more point. Okay. Not every receipt is income. Not every receipt is income. If SSC takes a loan, is it income? No, it is a loan. He will have to repay that. So not every receipt is income. It has to be revenue receipt. So any money comes, that is income. Is not correct. That money receipt should be an income. I will tell you example. If you don't do head classification correctly, what will happen? I will tell you. One more real example, actual life example, happened with me. So I can tell you confidently. See, there was one, let's understand Mr. Say Q. What happened? This Mr. Q sold one plot of land. Mr. Q sold one plot of land. So what do you think, when plot of land is sold, it should be taxed in which head? By your common sense, you tell me. You know all the five heads of income. HP is house property. HP gets attracted when HP gets attracted when you are earning rental income. for a property. Property means constructed property. This was a vacant land. See, if on house you are earning rent HP, but house you are selling capital gain. Now land you are selling. So what will happen? Capital gain. On selling of this land, there should be what? Capital gain. Yes or no? See now, one thing happened. This was sold for, so this is called as sale price. Full value of consideration. This land's sale price was 1 crore. It was bought for, see, there was an expense incurred. There was an expense on sale, like brokerage. Like what? Brokerage. Say that was 2 lakh. So what is the amount that he has got from selling this land net? 98 lakh. But this 98 is not gain, na? This 98 is called as net sale consideration. But this is not gain because he had purchased this land, na? So there was a cost of acquisition, means purchase cost, which was 48 lakhs. Fantastic. So what was his capital gain? Huh? Means this was his income. Okay. This person na came to my office. He said, sir, I want to save the tax. What he said? Because on this, tax is at 20%. So there was a tax of 10 lakhs. And you know, there are some modes by which tax planning can be done. Legal, not illegal. Legal. Means, so he had half knowledge. And his tax consultant had told him that your tax liability is 10 lakhs. Now, half knowledge he had, oh, we can do tax planning, we can do tax saving by investing this 50 lakh somewhere. We can do tax saving, but exactly where, how, he did not know. So, thankfully, he landed in my office and he said, give me mode of saving tax. So, it is my habit that I will not look at only figures and do the calculation and tell. I will go in depth of the transaction because I should be satisfied about which head I am taxing in. You will say, sir, so what you experienced? Head is capital gain. It cannot be salary. It cannot be HP. Because I told you in HP it should be annual income, rental income. It cannot be salary, it cannot be HP, it cannot be business income because it is not his business to sell these plots. It cannot be other sources. Or I don't know whether it is other sources. I don't know what it is. But for it to be capital gain, what should happen, you know? Capital gain, which is charging section. Capital gain, what is the charging section? So I know fundamentals. I always visit fundamentals. That for it to be capital gains, it has to fall in section 45. It has to fall in section 45. Section 45 says that two conditions have to be satisfied if you want to tax in CG. In short, if CG, your income has to be taxed in CG, two conditions have to be satisfied. Number one, it should be capital asset. What it should be? Capital asset. Plus, there should be transfer. Transfer means sale. 45 says that there should be transfer of capital asset if it has to be taxed in 45, that is capital gain. So in this case there was a sale. But then I went in depth of definition of capital asset, where I understood capital asset is defined in section 2 clause 14 of Income Tax Act, and capital asset is defined as any property, any property. Till this point it was fine, except or excluding rural, agri, cultural land. Understood kya? Rural agricultural land has got a definition. Rural agricultural land has got a friends, rural agri land has a definition which is not urban agri land. So I went into these definitions and then I understood. To cut the long story short, I understood that this land was a rural agricultural land. So the land sold by this so-called Mr. Q, my client, is not a capital asset. In my example, Mr. Q has transferred what? Yes, rural agri land. How did I find out? I took 7 by 12 extract. 7 by 12 extract is the extract which tell you exact position of that land. And when I observed where that land is, I understood it is rural agricultural land. So what is transferred? What is transferred is not capital asset. Now which head is remaining? So friends, 45 cannot be attracted. I made that conclusion. 45 cannot be attracted. Then I went to which head? Huh? IFOS. Then I went to 56. IFOS. When I checked 56 now, what it said? We tax two things. One, some specific incomes. Like we tax some specific incomes. Like winning from lotteries, horse races, card games, puzzles, some type of gifts, dividend, interest, gambling, betting, online gaming, all these things. It is not falling in that. And pay attention, pay attention. Residuary incomes are taxed in this head. Residual incomes means which couldn't be taxed in any what other four heads. Now I started understanding what is income, because now I had to check whether this sale of rural agricultural land, whether it will fall here. This is only one category pending. Now I understood that income means what? Income means it should be revenue in nature and not capital. And by sale of land, friends, tell me please honestly, by sale of land, will I get a revenue receipt or capital receipt? One time, na, I sale I get, not revenue. Point is, sale of land gives me, sale of land gives me which receipt? capital receipt. Therefore, it is not equal to income. Then I called the client. I very seriously told him, you have to come to my office with a check of 1 lakh rupees immediately in my name. Then I will tell you secret. First, give me the check. He gave happily. I told him zero tax. He said, how? Cannot be taxed either in CG, cannot be taxed in IFRS. Untaxed. Don't take any decisions haste. It's not about only figures. It is about charge. Are you exposed to salary? Or are you exposed to HP? Are you exposed to PGBP, capital gain, or IFRS, or none? It can happen also this way, that none. Difficult to believe because Mr. Q is sitting with 98 lakhs in bank, not 50 lakhs, 98 lakhs. Because 48 lakhs was his cost paid earlier. So he is actually sitting with 98 lakhs in bank, and I'm telling him no tax. He will happily give me check of 1 lakh. Professional fees for application of knowledge. So second opinion he took because his first tax consultant had told him tax of 10 lakhs. I saved it for him of 9 lakh direct. Getting it? See, that is the importance of knowing heads of income. Getting it? This is the impact. Now, if anyone asks you, why do we need 5 heads? You know the reason. You need 5 heads because every head will have its own decided way of offering you deductions. That means head-wise, what will change? Head-wise, calculation of total income and tax liability might change. Clear? Now we are going to do overview of entire format for calculating your tax liability. Entire format for calculating tax liability. So this will take like 45 minutes. After this session will be over. But this 45 minutes, many things will happen you will not understand. Like we did index of CGST Act. It started making sense when afterwards. Same thing. This will start making sense as and when we go ahead in the syllabus. Some things will make sense now, something will make sense afterwards. But patiently you have to complete with this format. When you complete with this format, you would have understood your syllabus. Till what point we have to reach in this income tax, you will understand with this format. So what is the name of the format? Yes, it is format for computation. Computation of what? Huh. But I will be very specific. Format for computation of total income. Total income means, for your understanding, total income itself means, yes, taxable income. Format for computation of total income, that is taxable income and tax liability for assessment year. I will do for your exam now. So for assessment year 25-26 relevant to PY 24-25. Is each and every point in heading clear? Heading, no doubt in any word in heading. Start with the format, particulars, particulars and 3 amount columns. But you will keep amount column very small because anyways right now I'm not interested in amounts. But remember I need 3 amount columns. Once in my articleship I did only 2 amount columns. My calculation was correct, but my boss literally tore that page and threw it on my face. Calculation was correct. That day I was so happy that yes, my boss will, praise me for my calculation. And this is what I got. So format is important, I understood that day. Because otherwise, how will your client understand your calculation? So format matters. But nice lessons you get in articleship. Till you qualify, they can treat you where you want. Day you qualify, you are same with them. Remember, this is what happens. When my result was out, CA result, and I qualified, I went to my boss to tell him that I qualified. As usual, I was waiting for half hour, 45 minutes. Then I did not go in. My boss came out to congratulate me. Means usually I had to be in waiting. Now this said, oh, you are waiting here for 45 minutes. You should have told me. I would have entertained you earlier only. I said, see what? Only two alphabets are making difference. Till yesterday you are asking me to wait and not giving me any bhav. You are just, treating me like this, like any other labor. And today you are saying, see, only till yesterday my knowledge was same. Today it's same. Only thing is institute has certified it. So you immediately you start treating me as a colleague. Till yesterday I was. So this is the difference. Okay, those who feel what is there in that two alphabets. There is a lot. Okay. See, particulars, 3 amount columns. A point. It starts with income from salaries. It starts with that. Which are the sections? 15 to was only 3. 15, 16, 17. That is the problem with Income Tax Act. It is deceptive. Only 3 sections. But it will go on for our 2 days. Because that has to be read with rules of calculation. That is problem with current income tax. It is deceptive. It looks like 3. But it has to be read with rules. And even some part of section 10. Which is exemptions in income tax. So 15 to 17 that way. What all will be taxed? Your basic salary, your bonus, commission, all of these are what? All of these are what? Monetary benefits. Yes, these monetary benefits are fully taxed. So you take them in second column. Which column? Second, not third. Third is reserved for final salary. Third is reserved for final HP. Third is reserved for PGBP, cap gain, IFOS. Every head's final taxable amount will go in third column. And other calculations will come in first 2 columns. So basic, bonus, commission, some allowances, somewhat allowances. They come in first column because against that you will get exemption. Do I need to tell you what is exemption? What is exemption? What is exemption? It is that income which does not form part of total income. In short, it is tax free income. Like you had exemptions in GST. See, actually, healthcare service exempt, but it is actually a supply. But that supply is kept out of GST. Same way, actually, allowance is an income, but some of the allowance will get exemption. So, what you are doing? First column you are taking allowance received, less you are taking exemption in first column in bracket, and taxable figure is going in second column. Then there is perk. What is there? Not perk Cadbury. Perquisites. Perquisites like accommodation. What else you can get from your company? Car. Then facility of, yes, facility of, what facilities you can get? Helper. Anything that you get from your company. In what terms? Not in cash, but in kind. All these perquisites are received how? In kind. Kind means what? Non monetary. Friends, non monetary is also benefit. Do you agree? So, non monetary is also benefit, and benefit is income. Benefit can come to you in directly money or non monetary. If they start saying that non monetary is not taxed, then from my employer, I will take very nominal amount in cash. Rest of the things I will take in kind only. Means I will tell him, you only give me house, you only give me car, you only pay my hotel bills, you only pay my credit card bill. You just give me small amount of salary. But government says that is not the thing. Everything is taxable. Let it be monetary or non-monetary. But problem with non-monetary is that it is in kind. How to calculate that? So this you have to value. What you have to do? Value. You have to find the value of this, and this value will be taxed. Take it in second column. That value will be taxed. Yes. Now friends, there is something called as employers contribution to PF, Provident Fund, that you take in first column, less you exempt something. Exempt. Then you take taxable figure in for your retirement. Who is taking effort? Your employer. So your employer is paying money in your retirement fund, which is called as Provident Fund. So that gets taxed, but to some extent it is exempt. Next, sorry, interest. Interest on what? Interest on Provident Fund. First column, less, exempt. Now what happens? Take taxable figure in second column. Then you might get some retirement benefits. You might get some retirement benefits. This is only when you, in that financial year in which you retire from that company. Retirement benefits like leave encashment. Like what? Leave encashment. gratuity, pension. So all these things you write in first column, less, yes, exemption, balance will get taxed. Almost everything is done. You will take total of second column. Total of second column is called as, say it loudly, gross taxable salary, not income from salary. Gross taxable salary. Because government is kind enough to give you some deductions under section 16. See, salaries is 15 to 17. So 16 is dedicated to deductions. 1A. Why 1A, sir? Where is 1? 1 is deleted in AY 24-25 itself. Sorry, AY 4-5. Way back it is deleted. So 1A directly is there, which is standard deduction. You all know the figure. What is the figure? Some of you are saying 75, but I told you 50. What exactly is correct? Both are correct. Welcome to income tax. Standard deduction, if you are, there are two ways of paying tax. We'll discuss as we go ahead. One is by applying one provision of 115 BAC, which is called as, which is now become default. That is in default tax regime. That is in default tax regime. So in this is 75,000. Under default it is 75,000. And when you are out of 115 BAC, means you are paying tax as per old regime, it is 50,000. So both are correct. As we go ahead, I'll explain you today itself both the regimes and what it is, what should be done. So that 50,000 you will take or 75,000. Two. Two is something called as entertainment allowance, which is allowed only for government employee, which is allowed only for government employee, and that too when I'm out of, so many times I'll be doing 115 BSc and crossing it. Crossing it means when I'm not paying tax as per 115 BAC. So you must have taken a standard deduction in first column. You must have taken entertainment allowance in first column. Then you take third point, which is what? Allowed only when you out of 115 BSc. Chalo, I should tell you in one sentence what is 115 BSc. They introduced one alternative way of paying tax, alternative way of calculating tax. This alternative way of calculating tax is called as 115 BAC, section 115 BAC. Pay attention. Huh? This was alternative. This was alternative. Until last to last year, it was called as new tax regime. What it was called as? New tax regime. Then in AY 25-26 onwards, It has become default. Default means that's the main one. And if you want to opt, you can opt out of that. To put long story short, there are two rates of paying tax. One is higher rate, one is lower rate. Higher rate is in old, lower rate is in new. Which one would you like to select? Of course, new. Then, sir, what is this? Why are we discussing old also? What happens in old? There are many deductions allowed. So, what will happen? In old, income will go down, but rate of tax will be high. In new, many deductions are not allowed. So, there is a probability that income will go high, but tax rate will be low. So, option is yours. What you want to do? Option is yours. What you want to do? In short, we may have to calculate tax in both and then take a decision which is better. In exam now what to do? They can tell you. They will tell you that SSC is paying tax as per 115 BSc or SSC has opted out. Whatever is told, you do it accordingly. Sometimes they may ask you, you decide. So you'll have to calculate by both. Clear? But that creates one doubt in your mind. If you're bright, one doubt should come in your mind. So you are saying more and more deductions under old, but in new, but in new here, but in new, they are giving 75 more and less in old. How come? I'm only contradicting what I said. I'm not contradicting. Government has contradicted because that is the fact how it goes. Government now wants more and more people to take new regime. So they are promoting people. So one way of promoting people is to give more deduction of this standard deduction. Other deductions will be denied, but standard deduction given is higher. The other deductions are denied. See this. This is denied. Which one? See, this is denied. What is denied? Profession tax. So other deductions are denied, but standard given is high. See marketing. It is marketing. What normal youth will understand and normal salaried persons, what they will understand? Will they understand other deductions or standard? Standard is like visible, 75,000. So attracting taxpayers to take new regime. That is the logic. When this was introduced, I also had a look at it twice. How come government is doing this? Where tax payable is actually at a low percentage, deduction given is high. How come? But this is the logic. At three places, you will find that deductions are higher in 115 BAC as compared to old. At three places only. At other places, deductions are denied only in 115 BAC. So I will tell you as we go ahead. So sum total of deductions you will take in second column. When you minus deductions, what will you get? From GTS, when you minus the deductions, what will you get? Yes, you will get. No, no, not income. Net taxable. अभी मंजिल बहुत दूर है. This is only net taxable salary. First head. If you say net taxable income, then that means you have reached your destination. No, no. Destination is too far. This is just first head. First head is done. I'll have to go to now second head. All of you have head. Second head. Go to B. What is B? Hmm. Income from house property. All of you start with something called as very technical gross annual value called as GAV in second column less municipal taxes paid by owner of property during PY. Municipal tax you minus. Now you get net annual value not taxable because deductions are allowed. Like there were deduction in salary now. There are deduction in HP also. NAV minus deductions. Which deductions? Under section 24. HP falls in what? 22 to 27. 22 to, so deduction is given in section 24. A, standard deduction. Here also standard, but bits more sensible. Standard deduction. Standard deduction, but which will be at 30%. 30% of what? NAV. So good one. Not like fixed figure. I don't like fixed figure deductions. Because even if your salary is 1 crore, you will get 75,000 only. Even if your salary is 10 lakh, you will get 75,000. It is so meaningless. So it is good to have based on percentage. Higher the income, higher will be the deduction. Lower the income, lower will be the deduction. B. All of you B. Interest on borrowed capital. Borrowed capital means housing loan. Housing loan. Take total of this in second column. Minus it from GAV. What will you get? Sorry, minus it from NAV. What will you get? You will get therefore net income from house property. Put it in third column. My columns have gone for toss, but you put it in proper columns. Salary is done. HP is done. What next? PGBP. C. Profits and gains from business or profession. Someone is talking. Why? PGBP. So don't you think that PGBP to we already calculate in every business? NP. Your P&L account gives what? Profit. Profit that only we want. So it is nothing but net profit as per profit and loss account. I can see some of you getting impatient. That is not correct. When you took admission for CA, then you have signed an agreement with yourself to be patient. If you can't be patient in the class while self-studying, from where will you get the discipline? Just think. NP as per P&L account. But this NP is not final PGBP. How did you get the NP? How did you get the NP? In your P&L. How did you get it? On the credit side, you have put all the incomes. On the debit side, you have put all the expense. Some expense in debit side are unnecessary. So unnecessarily NP has gone down. Profit has gone down. Because unnecessary expense you have debited. So what will you do? With add. And unnecessary items you have credited also. Because of which NP has unnecessarily gone up. So what you will do now? Adjust the NP. How will you adjust the NP? By adding. Adding what? Expenses debited but not allowed as deductions slash something called as specific disallowances. These things you will add. And what will you less? At this point, you will take subtotal. And what will you less? Any idea? What? No. I just now told you. You will less items credited but not taxable. Under what head? Friends, say something. Friends, hello. Items credited but not taxable under PGBP. If you credit dividend in your P&L, it's high for us. But unnecessarily it is forming part of NP. NP has unnecessarily gone up. Bring it down. Now what will you get? In third column, you will get finally what you wanted, that is PGBP. So friends, till now what all you have got? Salary, HP, PGBP. Now go to next head. Next head is capital gains. Means on transfer of capital assets, there shall be capital gains. Can we calculate capital gains? Shall we? Capital gains. It starts with full value of consideration. Second column. It starts with FVC, full value of consideration, means sale price, less expenses on transfer. That gives you what? That gives you net sale consideration. FVC minus expense on transfer, that gives you net sale consideration less cost of acquisition means purchase cost less something called as cost of improvement. So you minus cost of acquisition minus cost of improvement. What will you get? You will get therefore LTCG long term capital gain or short term capital gains as case maybe. I'll explain you what is that. And minus exemptions with which expectation my client had come to me. That exemption. So these are exemptions under section 54, 54F, 54 EC, etc. Subtract exemptions. Now what will you get? Now you will get therefore taxable LTCG slash STCG in the third column. In the third column. So see finally you have got how many heads till now? 4. Go to fifth. What is fifth? IFOS. E point. Income from other sources. All of you? Income from other sources. First point. Gross income. Whatever is the gross income, you will take that in first column. Minus what? Deduction of expense. Deduction of expenses to earn such income. If available, huh? If it is available, you will get that. Now what will you get? Net taxable IFOS in third column. Can you please take total of third column? Take total of third column now. That will be called as F. Therefore, gross total income. So what is gross total income? A plus, B plus, C plus, D plus, E. After considering clubbing of income, after considering clubbing of income and something called as set off and carry forward of losses. So something will happen called as clubbing of income and set off and carry forward of losses. Means suppose in one head there is a loss, then that loss will be subtracted from the income. That is called as set off. And clubbing means someone else's income might be included in my hands. Like I have done FD in name of my daughter. On that FD she earns interest. Everyone understands that interest is not her income. That interest is actually income of me or my spouse. So that income gets clubbed. Examples I'm giving you. So GTI you have got G less deductions under chapter 6A. Yes, deductions under chapter 6A. Now, in HP there was some deduction. In salaries there is some deduction. In capital gain there is deduction of expense on transfer, cost of acquisition, cost of improvement. In IFOs there is deduction. So every head has its own deduction, but these are common deductions. Chapter 6A are what? Common deductions. 80C to 80U are the sections in which you take these deductions. And these are, by the way, allowed only if assessee opts out of section 115 BAC. See, if you are in 115 BAC, you have got low rate of tax. So deduction is not allowed. Only if you are going out of 115 BAC, you will get the deduction. So allowed only if assessee opts out of 115 BAC, except 80 CCD2, means 80 CCD2 will be always allowed, slash 80 JJAA. I told you, no, it's fancy section numbers. These are allowed in all cases. So anyways, you will take deductions. Now what will you get after taking deductions? Finally you will get what you will get finally. Finally you will get total income. Total income means nothing but taxable income. Whatever amount you get now, it will be rounded off to nearest of 10. Rounded off to nearest of rupees 10 under section 288A. Finally you have got what? You have to reach till this point. Total income. On total income, what will you do? On this total income, you calculate tax. You divide total income in two categories. One, there are some special incomes. So special incomes means, example, long term capital gain, short term capital gain, lottery, gambling, etc. These are taxed. You know, these special incomes are taxed at income tax rates given in Income Tax Act. I only told you some time back that rates of income tax are given in Finance Act, but that is for balance income. For special incomes, it is given in IT Act itself. For example, winning from lottery, 30%. That comes from 115 BB of Income Tax Act. Example I'm telling you. So special incomes will be taxed at income tax rates given in Income Tax Act. And for balance income or other income, balance or other income you can say, you will apply, what you will apply? You will apply slabs. If we talk about individual, our main working is going on for individual. So you will apply slabs. This, to apply these slabs, there are two possibilities. These slabs or these rates on which income? Balance income. Two possibilities. It could be as per 115 BAC, which is now default, or it could be when you opt out, when you opt out of 115 BAC. That is correct. Old regime. These are two possibilities. Friends, what are these possibilities? In default, what happens? In default, what happens? In default, that is 115 BAC, lesser deductions, therefore higher total income, but lower tax rates. Do you agree with me? Do you agree with me? But lower tax rates. And in old, what happens? And in old, what happens? Higher deductions, therefore lower total income, but yes, the choice is yours. This is thought process. But lesser deductions I have said now. For that, except where? Except section 16 1A, standard deduction. Correct. 80 CCD 2. You learn that. And one more is in 57 for family pension. So, anyways, now you have got tax. After getting tax, don't stop. Add. Tax will be increased. You have got tax now. You'll add these two taxes. One on special income, one on balance income. In that, you add surcharge, if applicable. Surcharge is tax on tax. Why, I will explain you. Or less, something called as rebate under section 87A, if applicable. So out of this, any one can be applicable or none can be applicable. So add surcharge or less rebate. Now you will get one tax. Now in that you will add health and health and education cess at the rate of 4% of tax. Now what you get? Now you get total tax payable. Now you get total tax payable. Friends, when is this total tax payable calculated? In PY or AY? AY. Very good. But in PY, you might have paid some advance tax, or people, while paying you income, may have deducted your tax at source. So from this total tax payable, you will minus advance tax, TDS, TCS. You will minus advance tax, TDS, TCS. Now what will you get? Now you will get balance tax payable. This will be paid as self assessment tax. This balance tax payable is there, na? It is rounded off. This balance tax payable is rounded off to nearest of rupees 10 under section 288B. Did you all understand to the extent of 100%? This is how it happens. So your syllabus, as far as your syllabus is concerned, what all is your syllabus? Salary, HP, PGBP, means all five heads, capital gain, and other sources. Five topics, basics of income tax, five heads, deductions, yes, clubbing, set off and carry forward of losses, and calculation of tax. Every possible thing in your syllabus till calculation, not anything in assessment. So, as far as your syllabus is concerned, let me consolidate that. What you can expect in your syllabus. What you can expect in your syllabus. 1. Basics plus topic of residential status. Basic plus residential status. Then 5 heads. Then clubbing, set off, and carry forward. Clubbing, set off, and carry forward, and deductions under chapter 6A. Then advance tax, TDS, TCS. Then, of course, here one more calculation of tax, tax liability computation. And one more thing, filing of returns. That is ITR topic. So check how many topics. 1 basics, 2 residential status, 3 to 3 to 7, 8 clubbing, 9 deductions, 10 advanced tax TDS TCS, 11 tax liability, 12 income tax return. This becomes your syllabus. And our focus will be on whom? Our focus will be on individuals. Our focus will be on individuals, not companies, firms. No one, only individuals. Clear? So I hope this session helps you to understand these basics. When we meet in next session, that is at 11, say 25, 11:30, we will start with basics. Means especially we will start with rates of income tax for individual. So that topic, next topic will coincide with one basics and second tax liability. Because I want to explain you concept of rebate, surcharge, then different slabs. In surcharge there is marginal relief. So anyways, all these concepts. So we'll meet at 11:30 and do this discussion. 11:30 to about 1 1:15. Let's see how it goes. Thank you.